Today, it's Block's Investor Day, and Jack Dorsey is doubling down on the company's focus on Bitcoin. And I'm in West Palm Beach, Florida, to talk with experts about what went wrong with Terra. Welcome to CNBC's Crypto World, live outside the 2022 Permissionless conference. I'm Kate Rooney. Crypto prices back in the red today. By noon Eastern, Bitcoin was worth around $29,000. Ether dipped below $2,000. Meanwhile, one cryptocurrency moving higher today is Terra USD. It's up 16% today, but still worth far less than its dollar peg. Let's get to the latest on the Terra platform. Co-founder Do Kwon announced an on-chain proposal to split the network from the failed cryptocurrencies. The split is known as a hard fork, and Terraform Labs would rename the old network to Terra Classic. The token would be known as Luna Classic. The new network would focus on DeFi products that operate on the Terra blockchain rather than stablecoins like UST. In a preliminary poll on Terra's website, the proposal was very unpopular. 92% of respondents voted against the idea of a hard fork, but Do Kwon moved forward anyway. In other Terra news, the legal team representing Terraform Labs has resigned. The Block reporting that Terraform's 3 lawyers left the company in the wake of UST's collapse. Terraform Labs told CoinDesk that a small number of employees have resigned since the cryptocurrency's crash, but that a majority of employees remain committed to rebuilding that platform. Here at Permissionless, I spoke with experts across finance and crypto to find out just what went wrong with Terra's platform. Nick Carter of Castle Island Ventures thinks that the Terra USD project was destined to fail from the start.
People think of this as software engineering, but it's financial engineering, right? And I remember calling you a couple months ago and saying, something bad's gonna happen, right?
I called Nick actually to be like, hold on, can you explain this to me? And yes, exactly.
So it was pretty predictable if you had a little bit of perspective, right? And were at least somewhat familiar with the history of currency pegs. And then also just if you had a little bit of sense and you inspected the mechanism. But not many people were willing to do that because it was really veiled in complexity. And I think, deliberately so. Often crypto people have a habit of making things incredibly opaque and complex so that the relevant people can't investigate and understand the mechanisms.
Nick was an outspoken skeptic of UST. When I asked him why there weren't more people speaking out about the risks with that stablecoin, here's what he told me.
There was a sense that you didn't want to offend your industry colleagues, your industry peers who were invested in this. Frankly, and I'll be candid, Do was extremely aggressive with critics. I think everybody who was a high-profile critic experienced that. And the Terra army, they literally called themselves lunatics.
MakerDAO's Sam McPherson said the crash highlights the importance of over-collateralized stablecoins. Here's what he said.
I think this kind of highlights the need for collateralization and why MakerDAO has taken the more conservative approach of over-collateralizing. It doesn't scale quite as quickly, but in the end, the users who are holding DAI can be certain that they can trade it for $1, and that's what's important.
There's also a lot of talk about what this collapse means for the future of stablecoins and trust from users. Joao Reginado said that developers need to focus on building platforms for developers and users, not just the stablecoin itself.
I think it's very unfortunate for the stablecoin space, right? Because our belief is that the world needs this Uber dollar API that runs on chain, right? We're all trying to build different versions of that. But if you think about it, and the way that we look at something like USDC, it is a platform, right? I think people tend to focus a lot on the bare asset side of a stablecoin, and the end users that hold it and transact. But actually, it's such an important piece of substrate for the industry that you have all these ecosystems and developers and businesses building on top of that. And from that perspective, we feel the responsibility for building a platform that is going to be there for developers and for businesses for the long term.
Finally, there's implications for the companies that are exploring crypto and stablecoins especially. Catherine Gu, Visa's head of CBDC and crypto infrastructure build, says the company will remain focused on fiat-backed stablecoins for now.
I think, our focus currently at least is definitely on the fiat backside, and we're looking at these digital currencies and how they can sort of potentially create very interesting use cases. I think generally speaking, how we're looking at the stablecoin space, there's the type of stablecoin in which you're managing your collaterals on-chain. So things like Maker, Frags, they have all their collaterals on-chain. And then you have the USDC of the world, which is managing those collaterals off the chain, i.e. you deposit the money in the bank. And the way I think we're looking at it for sure, I think by now it's pretty clear not every single stablecoin project is created equally, and when that name comes, which is stablecoin, I think we need to understand what is the risk profiles associated with it. And I think we can associate that all the way back to the 2008 crisis. If anything, even the safest asset can have risk.
Okay, another big story we're watching today, Block's Investor Day. Block is hosting its first Investor Day in 5 years, making the case that it's not just a payments company, and Bitcoin is a big part of that future. Block executives want Wall Street to value this company as more than a payments pure play. Jack Dorsey saying, quote, "We are no longer just a payments company." Block is now made up of different ecosystems. He's got Square, Cash App, Tidal, and his big focus, those various Bitcoin businesses. Square's CFO telling me calling it a payments company is like calling Amazon a bookstore. Now, Bitcoin only accounts for about 5% of Block's gross profits, but it's still a big part of what Dorsey is focused on today at Investor Day.
We also see Bitcoin as an extraordinary trend towards an open standard for global money transmission. That becoming a reality allows our entire business to move faster globally for sellers, consumers, and for artists. Given our expertise and experience with developer platforms and hardware, we decided to fill further gaps in the market, which we believe will become massive parts of our business in the future, and a smart way to add resilience to our company.
Dorsey also says he's not as bullish on other cryptocurrencies and that the internet needs its own cryptocurrency. He says that Bitcoin is, quote, the only cryptocurrency that can fill that role. Okay, before we go, I also spoke to Robinhood CEO Vlad Tenev about the company's turnaround plan. Here's what he said.
I couldn't be more confident in the future than I am now. And I'll tell you, Robinhood, this past quarter, you've seen all the new products that we've been rolling out. And it's not just Robinhood 3, the Web3 wallet, but things like stock lending, the 1% APY on your uninvested cash that we announced last week.
You can find that full interview over at CNBC.com. That's all for today, but we'll be back again tomorrow with a lot more. We'll see you then.